Hello, welcome to the European Open briefing for Tuesday, November the 7th. I'm Rafi Barjan, currency analyst at XM.com, and we're going to be taking a look at what's happening in the currency markets today. The US dollar is struggling to hold on to the 114 level, having hit a fresh 8-month high earlier yesterday. We are seeing a pullback in US Treasury yields amid some skepticism about whether or not Trump's tax plans will get approved in Congress. The main movers this morning are the Australian and New Zealand dollars. The Aussie fell after the RBA held rates as expected, but sounded a bit more concerned about inflation as well as household consumption. The Kiwi, in the meantime, did rise strongly after the government there confirmed that the currency won't be part of the central bank's reforms, although it has given up some of those gains. And we are seeing also, yesterday rather, we saw gold making some impressive gains on the back of a weaker dollar, as well as some risk-off relating to a possibility of some fresh missile tests by North Korea and rising tensions between Saudi Arabia and Iran. Let's start first with the dollar. We can see dollar yen did rise to that 8-month high yesterday. It did fall below 114 level in Asian trading before climbing back above it at the start of European trading. But in purple here we can see the yield on 10-year Treasury notes, and the fact that dollar yen and Treasury yields have somewhat diverged. Treasury yields have been retreating from those highs in October following, once it became apparent that Jerome Powell would become the next Fed chair, who's not likely to pursue a faster pace of rate increases. Some of the earlier gains for the dollar had been on the back of speculation that the next Fed chair would be a more hawkish one. Also, doubts about whether or not the tax plan will get passage in Congress. That's also weighing on the on yields, as well as the overall subdued outlook for inflation. The yields haven't really kept up with rising expectations that, at least for the next few months, we will be seeing rate increases in the US. The next one will likely come in December. That's been one of the factors supporting dollar yen, because we've had a recent run of very strong data. The last week we had very strong ISM manufacturing and non-manufacturing PMIs, strong factory orders, and if you overlook the disruption to the non-farm payrolls from the hurricanes, that's also been very strong indeed. Let's move on now to the gold. Gold prices. We can see that big jump yesterday. There wasn't a particular reason for that. Combination of weaker dollar as well as some risk of President Trump is visiting Asia on a 5-nation trip. North Korea was high on the agenda. He's already met up with the Japanese Prime Minister, and he's visiting South Korea today. There are some concerns about North Korea doing something to get attention during Trump's visit. Although that is unlikely, it has boosted safe havens. Also, there are some tensions in Saudi Arabia as well. Over the weekend, we had Yemeni rebels firing a missile towards the Saudi capital, Riyadh, which was shot down, but it is suspected that those missiles were supplied by Iran. Also, we are seeing other developments in Saudi Arabia, where the crown prince there is basically his anti-corruption probe has led to the arrest of several royals and current serving ministers, leading to a bit of uncertainty there in the region. Although gold prices have receded a little bit from around 1,283 yesterday to around $1,277 an ounce at the moment. Moving on to European currencies, we can see the euro is fairly steady, although it has come under pressure at the start of European trading, falling below the $1.16 level. We didn't see much of a boost yesterday from very strong business survey data. We saw the Centix index jumping to 10-year high in November, and the final composite PMI, although it was down from the prior months, it still was a strong reading and points to a very good start for the third quarter. The pound, meanwhile, did manage to recover from last week's losses, climbing back above the $1.31 level, although it's unlikely to see significant gains over the coming days. We've got the ongoing Brexit uncertainty, as well as the escalating sex scandal in Westminster, which has already led to the resignation of one cabinet member and could threaten to potentially bring down Theresa May's fragile government. One thing of interest to watch out for this week is that the Brexit talks will resume later on in the week. The two sides are attempting to speed up the negotiations so that they can make enough progress by December for the talks to move on to the trade round. Moving on to the Australian dollar now, because we did have the Reserve Bank of Australia policy meeting. They held rates at 1.5% as was expected, and although they do remain optimistic about the growth outlook, they said that growth should rebound and to hold around 3% over the next few years. They were rather, they were slightly less optimistic about inflation and household consumption. They said that underlying inflation will likely remain low for some time, and that the outlook for household consumption is a continuing source of uncertainty, with household debt levels rising faster than household income. So that suggests that the RBA isn't likely to be raising rates anytime soon. We've already seen the expectations of the rate hike in Australia moving to 2019 from late 2018. If you look at the New Zealand dollar now, we saw the Kiwi making very decent gains at the start of Asian trading. The country's finance minister said that he's launching a review of the RBNZ, the Reserve Bank of New Zealand, and that it will not include any changes to the currency or targeting exchange rate. So that was received well by the markets, because there were fears that if that was included in its mandate, it could potentially lead to a weaker Kiwi in the long run. Although the new government there does want to add employment as part of the RBNZ's mandate, that could potentially lead to interest rates not rising at a time when unemployment is high and inflation is high, as the bank would try to balance the two rather than just targeting inflation. But we are seeing the Kiwi fall back now towards the start of European trading. It did rise above 0.6950 before falling back to around 0.6920 against the US dollar. We also have the RBNZ policy meeting coming up on Thursday, where they are also expected to hold rates at unchanged in November. Before we go, let's have a look at oil prices and the Canadian dollar. We're seeing fresh highs for both WTI and Brent crude. WTI hit $57.69 a barrel, and Brent crude hit $64.65. Both are fresh 2-year highs. The prices have been rising on the expectations that OPEC, non-OPEC will agree to extend the output deal beyond March 2018 when they meet for a meeting at the end of this month. Rising tensions between Saudi Arabia and Iran is also boosting oil prices. We also saw a drop in the number of oil rigs in the US last week, so that's also supportive of higher prices. In the meantime, Canadian dollar is finally managing to see some benefits of higher oil prices. It rose to 2-week highs. We're seeing USD CAD falling to 2-week lows of just below 1.27. Also boosting the loonie is last week's employment data, which came in, the unemployment rate missed expectations, but the number of new jobs created, that beat expectations, and that kept the hopes alive that we could potentially see another rate hike by the Bank of Canada over the coming months. Although another rate hike before the end of the year is unlikely, we could potentially see one early in 2018. Looking at today's economic calendar, the focus later on will be Eurozone retail sales and the dairy auction, which will impact the kiwi. It's not much major data coming out of the US. We've got a number of central banks speakers, although it's unclear whether they will be saying anything at least relating to monetary policy. But we've got Mario Draghi, the new Fed Governor Randall Quarles. He hasn't made any public speeches yet, so it could be interesting to see what he would have to say. Bank of Canada Governor Stephen Poloz and Fed Chair Janet Yellen all will be speaking later in the day. That's it from me. Thank you very much for watching and have a great day.